guys, and welcome to another episode of Working Money, getting your money working for you. Now I just wanted to take a quick sec to remind you guys, please subscribe to the channel if you haven't already. Click that little bell for new video notifications. And like the videos if you guys like the content I'm providing. And always comment on the videos. I love hearing what you guys have to say. I really do like this site, the Daily Hodl, news and insight for the digital economy. I found this article today, guys. The Hodl investment strategy from Bitcoins to altcoins. I'm going to link it in the description. I'm not going to read it all, but I am going to read a little bit of it, okay? Warren Buffett once said, only buy something that you'd be perfectly happy to hold on if the market shut down for 10 years. By now, most crypto enthusiasts know Warren B is not the biggest fan of Bitcoin. More precisely, he hates it. However, he is arguably the best investor of all time. Therefore, it would be foolish to reject his maxim on the basis of ideological differences. So how do we apply this superior investing philosophy of equity investing to the crypto markets? A little something we like to call hodl. And so guys, this is something we've been hearing a lot about, right? Hodling. Do we hodl? Do we wait for the market to go up a bit before we dump our coins, make a little bit of money, then wait for it to come down again, buy coins at a cheaper price, etc., so on and so forth, right? Well, here's the thing. It's a lot harder to do the latter. Hodling doesn't take much thought. Day trading or swing trading takes a lot of skills, a little bit of luck, and a deep knowledge on technical analysis to do it correctly consistently. Okay, guys? So if you guys are not experienced traders, which I'm sure a lot of you are not, and you're in the cryptocurrency market to make some money, this article is suggesting is to hodl long, so long as the coin you are hodling is a coin that has a strong backing, a bright future, something along the lines of Ripple XRP, if you want me to say it. We're not talking about hodling, coin number 1026 on the list on CoinMarketCap. Of course, I don't even know what that coin is, but it's probably garbage. But the fact of the matter is, if you're looking to hodl, the strategy is you must hodl something that is worth something, okay? And here is just real-world proof from the stock market, because we can always extrapolate information from the stock market and how it has performed, because there's lots of history, and we can extrapolate these results and apply them to the cryptocurrency market, because as we know, the cryptocurrency market is still relatively new, and we don't have the information. We just don't have the history on the charts right now to be able to analyze cryptocurrencies in the same way that we can with stocks. So, all right, first I'm going to talk, actually, I'm going to go back here, and I wanted to just read a little bit more of this article before we go on. So let's go back to the game. So I'm going to post this, guys, in the description if you guys want to read the whole thing. Okay, so they talk about the price of BTC went from $130 in September of 2013 to $1,000 in December. So if he had sold at the time of publishing December, so we're talking a short-term hold here, right? He would have sold for roughly $650. We have no idea when he bought his BTC, but let's say it was around for $100. Selling would have netted a 550% return, not too shabby. If he sold in mid-2015, 1.5 years later, BTC was only worth roughly $225. Still substantial gains, but not as impressive. So this is talking about the ebb and flow of the market, right? As we know, the market goes up and down, and you have to time it right. And this particular case is talking more about the swing trading on a shorter time frame. At the time of this writing, his $100 investment has returned him 6,256%. Now that is not too shabby. Sorry guys, I probably should have given you a little more context. You can read this whole article if you wish, but this is talking more about the swing trading and the ups and downs of Bitcoin, and saying, well, in this 3 months he would have made this much, and if he had waited it would have gone down and his returns wouldn't have been good, but had he waited another year and a half it would have gone up again and it would have been great. So we're going to talk about this with regards to hodling long and the benefits of that, okay? So here's a chart of the Dow Jones Industrial Average. And it's an index, stock market index, and we have information on TradingView here that goes back, over 100 years. But we're not going to talk about the 100 years that it goes back. We're going to just start it from 1950. So if you bought the Dow in 1950, and I know you guys are probably not born then, not even, able to put money into the stock market then, because everybody was way too young in 1950, or not even alive probably. But I just want to show this to illustrate a purpose here. So from 1950 to 1980, now that's 30 years, okay? So we're going way back here, the Dow 1950, and I just want to prove a point here that the averages are what matters. And holding long is the principle that I want to highlight in this video. So Dow Jones Industrial Average, 1950 is around here, okay? And then 30 years later, you held it for 30 years to about 1980. And as we can see, it went from 202.92 to 897.88. And that's 30 years, okay, guys? And it increased 342%. Not bad. It's 30 years, right? A little over 100% per decade. So now let's take the next 30 years. So from 1980 to 2010, I mean, this may be some of your parents may have been able to do this at this point. But again, I just want to highlight the principle of the long hodl, the 30-year hodl, okay? So we got numbers of 897.88. And then in 2010, the Dow was at over 10,000. So we're going from, so let's zoom in a little bit here, guys, and we see the 80s, okay? So 1980 is around here. And I'm using January 1st as just a marker point, just because it's easy to remember January 1st. So January 1st right over here, okay? And then 2010, right about here, January 1st, okay? So as we can see, guys, there have been ups and downs and ups and downs and ups and downs, but we're looking at the 30-year hodl, and there was an increase between these 30 years of 1,095% over 30 years, okay? So that's over 300% per decade, okay? Pretty good return on investment. And now let's take a look at a 15-year hodl, so half the amount of time. So from the year 2000 to 2015, and as we can see, the Dow, you know, even if you bought in 2000, which was right at the peak here, before it came crashing down again. So we're going to use this example this time because, you know, I've been using these examples for when, you know, the stock market was really just ramping up back in the day before a lot of these companies were just getting off the ground. But now, guys, we're talking up here. So you're worried, you know, you made a bad decision. You bought the stock market, the DJI when it was up here, okay, in January 1st, 2000, Y2K. You know, you realize you have electricity, your computer's working, the lights are on, you didn't need your bug out bag. So you decide to buy stocks that day, although the market is at an all-time high at this point in time. And you bought at 11,750. And a long hodl, even just 15 years later, would bring us to 2015, January 1st, 2015, right? Somewhere around here, guys. Where is it? There we go. Right here, okay? And as you can see, the numbers, so we have 11,750.28, and a 15-year hodl would have resulted in a 53% gain. So even if you bought at the height of the market up here, you know, peaks and valleys and peaks and valleys, and you know, you suffered two crashes here. So this is the .com bust and then the crash of 2008. So let's not forget, this is a 15-year hodl, so half the amount of time. However, there were two significant crashes, okay? These crashes were catastrophic for people. People were selling, people lost a lot of money, but you decided to hodl in these 15 years, and you still would have gained a 53% return on your investment. Not bad considering you weathered two storms, okay? You're still up 53%. Now, would it have been, was it the best use of your money? Was it the best way to invest your money? Probably not. I mean, you probably could have gotten higher returns some other way at this point in time by doing something else. However, you decided to weather the storm. There were two crashes and you're still up 53%, okay? Now, guys, I just want to illustrate one more point here. 2007, okay? Again, height of the market. We're up here, okay? So we bought at the absolute top of this market in 2007, and that we paid $14,198 just following the index here. And how long did it take for us? So we found that there was a crash, and I just wanted to show you, just to illustrate the principle further, how long did it take for us to break even again? So even just to make our money back, and that would be around here, okay? So from January 1st, 2007, it would have taken us roughly to March 13th, or sorry, rather March 1st, 2013, and that's a 2.7%. I mean, I just wanted to get a roughly when it was. So that was just over 6 years. just to break even on your money. So guys, even in these cataclysmic events, you know, when you think the sky is falling, everybody else is selling. They're missing out on their 401ks. They're ditching their money. They're leaving it on the table. They're leaving it on the table, and prices are down here. And you know what happens when prices down here, right? We talked about this in other videos. People with liquid money buy up everything. The rich get richer. Guys, we don't want you to make the same mistake, right? And so guys, this is just going to bring me to one last quote here from Warren Buffett, another quote from Warren Buffett, and it's very wise. If you're not willing to own a stock for 10 years, do not even think about owning it for 10 minutes. And so this just goes to the principle. I mean, I know there are probably some day traders in the group who are watching this video who disagree with this sentiment. I mean, I'm kind of one of those people because I do day trade. I do swing trade. I don't so much day trade anymore, but I do swing trade a lot. I look for moves in the shorter to mid-term. However, that aside, if you have no experience doing this, this is the sentiment you have to take home, okay? If you're not willing to own the stock for 10 years, do not even think about owning it for 10 minutes. So, guys, what are the coins you believe in? I know Ripple XRP's up there. We know it's on track to do some amazing things. This is the kind of cryptocurrency that I would hold for the long term. And we're always being told, it's always being drilled in our head, hodl for the long term, because this will be life-changing. And guys, I'm not even talking 30 years. I'm talking 5 years. As you know, this is the stock market. So we're talking about the stock market here, and the stock market is a very, very different market than cryptocurrencies. We're moving fast. Technology moves quickly, as you all know. So guys, what do you think? Do you guys think hodling's the right way to go? Or are you going to try to swing trade these cryptocurrencies to make a quick buck in the meantime? Anyways, tell me what you guys think. Please subscribe to the channel. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next video, guys.